Hello and welcome to the Nabil Show. Assalamu alaikum wa rahmatullahi wa barakatuh. Today we have a special guest with us, Huzaifa Ahmed. And today's episode is going to be diving deep into the subject matter of Islamic finance, investing, and halal mortgages. We'll have a ton of questions regarding the subject matter that I know that all of you have. And without further ado, we have with us Huzaifa Ahmed. He is especially qualified and certified in this subject matter. Huzaifa Ahmed, I'll pass it to you to introduce yourself.
Well, thank you for having me on the show. I'm Huzaifa, as you mentioned, and in terms of my background, I'm an accountant by trade. Been working in project controls for an engineering consultancy for about 5 years now. In Islamic finance, I have a professional diploma from the Chartered Institute of Management Accountants. It's based in the UK. My interest in Islamic finance actually began when my siblings, yourself and my sister, were interested in purchasing a house here in Toronto. And obviously, being in the Western world, for Muslims, it's a big challenge in terms of finding options that are legitimate, that are halal, and that fulfill our faith criteria. So that's kind of why I got interested in it. I read my first book that I ever read was a book by a well-known scholar, Mufti Taqi Uthmani, based in Pakistan. I read an introduction to Islamic finance, and that really opened up a totally different avenue that I never thought I would ever pursue. But that's where it all began.
Sounds great. So where do you see this field leading into? What are some of the contributions of Mufti Taqi Uthmani and the other scholars in the field? What are some of the breakthroughs that they've made?
Well, in a modern context, Islamic finance as an industry, you could still call it relatively in its infancy. During the Ottoman times, we obviously had Islamic finance for many years from the beginning of Islam, with the Prophet Muhammad sallallahu alaihi wasallam and the Khulafa al-Rashidin and all of the Muslim rulers that came after. But after the fall of the Ottoman Caliphate in 1920, approximately, Islamic finance was essentially non-existent in most of the Muslim world, until it kind of began again in 1975 in Egypt, when the scholar over there kind of came up with the idea of implementing Islamic finance in the wider Egyptian economy. And so that's where the grassroots efforts began in the 20th century, before the rest of the Middle East and the Muslim world started coming on board with that idea. There were a lot of challenges in the modern context, namely banking. We have, the banking system that is primarily predicated on interest. And then we also had a system that, an economy that relied on interest, right? Nations did trade based on that. The IMF, the World Bank, So there was a great revolution that needed to happen in Islamic finance, and a lot of thinkers, a lot of scholars, they sat down, had communications with economists, with country leaders, with people that are, in the finance industry, in the banking industry, in order to formulate options that, you and I today, 40, 50 years later, can kind of pursue. And so 1975 is where it began again, and then it took over in the Middle East. I would say in the 90s was the growth period, and then in Pakistan and the rest of the Muslim world came early 2000s. Yeah.
So I guess going back to a little bit of Islamic basics, what is the difference between conventional finance, conventional lending and interest-based financing versus Islamic finance and Islamic-based and Sharia-compliant lending and financing?
So fundamentally, lending in Islam is a charitable endeavor. It's not a profit endeavor. So in other words, you can never make money on money in Islam. The exchange of money must be on spot and it must be on par. So in other words, if I give you $1, you must give me $1 back immediately, and just $1. I cannot demand you to give me $1.50, $1.50 or $2 back in return, right?
Like for like.
Yeah, it must be like for like, and it must be on spot. And there's a great wisdom in that. We can speak about that a little bit later when we talk about, for example, the 2008 financial crisis. The like for like and the delay, the excess in money, it's the nitty gritty of why the American economy collapsed and thousands of people lost their homes and lost their jobs. Right. But I want to first bring everybody's focus on what is money.
That's what I was going to ask.
That's what is money. So there's, if you ask different people, different economists, people that work with money, what is money, they'll give you different responses. But generally, the general consensus in the modern world, in Islamically and in the banking context, is that money is a medium of exchange, right? So when I give you something, a consideration, when I'm going to sell you this mic, for example, you must give me something else that I want, right? So in a primitive sense, if I wanted a mic, right? If you wanted a mic, I give you my mic, and if I wanted maybe a glass of water, you would give me a glass of water, right? But quickly, what happens is you may not have something that I want, and I may not have something you want. But one of us has something the other wants, then you must give me something else in return so that I can buy what I want. Right? So you want my mic, but I don't want anything you have. So I'm gonna demand something. So I'm gonna say, okay, you pay me money. Right? That's what money is. It's a medium of exchange. Now, with that money, I can go buy an apple. I can go buy a can of, water, whatever.
So along with being a medium of exchange, it's also a store of value.
Exactly. So the first thing is a medium of exchange, and then it's a store of value. The store of value is essentially what determines confidence in the currency, right? So if it's, something that cryptocurrencies, for example, or, until I'm not talking about Bitcoin specifically, but I'm talking about cryptocurrencies in general, it fluctuates in value on a daily basis, right? So that cannot, do you have confidence that it's going to maintain that value, right? And then another thing is there needs to be a unit of account. How we quantify the value of things, right? How do we determine this is worth maybe $100, right? So that's going to be, when we put other goods in front of it, demand and supply will determine the price. That's where the unit of account comes in. It must be divisible. A money that's $100 in cash only, right? That's very difficult to quantify things that are of less value, an apple or a glass of water, whatever it is, right? So it must be divisible as well. So those are some of the maqasid, or you can say some of the inherent qualities of money that need to be fulfilled in order for it to be called money. And it also needs to be scarce. If money is in wide supply and everybody has access to it, that money becomes inherently inflationary and nobody has value for that, right? So that's where the argument comes about the American dollar being off the gold standard, or it comes the argument of whether we should go back to the gold standard, all of that. So those are some of the qualities of money.
That means the discussion should be around fiat currency is the accepted form of money in modern economic systems across the entire world, and nobody uses precious metals as a medium of exchange or a store of value anymore. They are as investment assets, or precious metals are used in ETFs and jewelry. Traditionally, there was gold and silver that's being used, but potentially also other things like pepper and dates or sugar, things that are not easily destructible, or things that won't just evaporate out of the blue, such as an animal will not be a medium of exchange or store of value because an animal can just pass away.
Yeah.
So the Prophet ﷺ described the difference between dates versus trading dates for like, or trading camels like for like is a difference. So what's the difference of traditional money versus current fiat currency money?
Well, traditional money, if you ask those who, the proponents of gold and silver, the reason they value gold and silver so much is the inherent scarcity of that. So gold can only be discovered when you mine it, right? And it's not every day that you get tons of gold. As opposed to fiat currency, with the click of a button, you can print out $1 billion, right? And in today's time, you don't even need to use a printer, right? Simply click some keys on the keyboard, and you can put all the money in the world that you want to unlimited value in our banking system. And that's the entire economy is digitized, and there is no control other than what the Fed, central banks do in terms of how much supply of money there is in society. Right. That's where, fiat currency comes in. And so it's very interesting. We have scholars that discuss whether fiat currencies are halal. Inherently, because of its inflationary, essence, right? And how much control the government should have of money, of the supply of money in society. All of these are big discussion because ultimately, the preservation of wealth is one of the purposes of our religion. There are 5 fundamental purposes of our religion. We all know the preservation of life, the preservation of wealth, which is where Islamic finance economy comes into. Right? There's the preservation of our dignity, there's the preservation of our health, right? And these are all very important things, and these are things that Islam takes very seriously. And Islamic finance falls under fiqh al-mu'amalat, the fiqh of transactions. Right? So that's where the discussion is.
So in the modern economic system, we have the money supply, and banks are able to increase the money supply or decrease the money supply, and thereby throttle the economy. And the financial markets will supply financial resources to entrepreneurs and enterprising individuals in order for them to set up businesses, purchase assets, and thereby grow wealth. And that system is available to anybody. It takes time to grow, but you're able to access capital in order to put into a business or into assets. So there's ample money supply that's happening. So in a system where there's quantitative easing, the money supply is there, and the cost of borrowing is cheap.
Yep.
And then when the interest rates go high, the cost of borrowing goes high. The supply is still there, but the cost of borrowing is high. So there's a deflationary measure.
Yep.
However, there's always access to capital.
Yes.
So in an Islamic economic system, to play the other advocate, how does a person access capital? How does that work? If there's always a limited amount of money in the system, and no one can print out huge numbers of money, how does a person go about raising capital for their own ventures or for purchasing assets?
So Islam obviously proposes and stipulates an active movement of money in society. One of the reasons why zakah is that it prevents a person from simply growing money in the bank. When money is not put to good use, meaning it's not used for investments or it's not used to, circulate in the economy, then zakah becomes liable on you. So that you are forced to give away some money in charity that will cause a movement in society, a circular movement in the economy. And at the end of the day, somebody who has enough money for him to be able to pay zakah, and people that own businesses or own assets, that money essentially does funnel back up to them. What does a poor person do with the money they get from zakah? What are they going to do? They're going to go buy food. They're going to put a roof over their head. They're going to buy car, whatever, basic things that they need in order to survive. And the people that own the assets, they're able to regain the wealth. So inherently or indirectly, there's a benefit to you as a person in order to put your money to use in the economy so that everybody benefits, right? And with Islam, one thing to note, one thing I want to say here, that we live in a capitalistic society. So, we all, talk about all the benefits of living in a capitalistic society, in a free market economy, that it allows for people to, open businesses, open up economic opportunities. It allows for unbridled growth and growth at a level that is simply magnanimous, unsustainable. Like, we have trillions of dollars in the economy right now, right? So in an ideal Islamic economy, would we have growth at a faster rate than this? No, because fractional reserve banking essentially allows you to lend out money 9 or 10 times the amount of money you have in your bank, right? So when you have an inflationary or a supply of money that is, significantly surpasses what you actually have in your coffers, that's going to allow for growth that is unbridled. But at the same time, it's going to lead to certain bust in the economic system that is going to cause thousands of people to lose their assets and to lose their jobs. So the way the economy will work is like we'll have a big cycle of boom and bust, right? So in 2008, we had a huge bust. And then from then all the way till COVID, we had a relatively large boom in the economy where people were making a lot of money. Cost of borrowing was very little. Different economic opportunities came up. People were investing, making money. And then we had COVID where the government gave everybody free checks, right? They were able to save all that money, still doing relatively well. And then in the last 2 years, we have a massive dip. Like, people losing jobs, can't afford to make payments, grocery bills going, through the roof, mortgages. I know people that were paying $2,200 mortgage and now paying close to $4,000, right? This guy who's been paying for over 5-7 years now, right? So he had a variable rate and now he's paying close to $4,000, right? Literally double of what you used to pay. This is the economy that we live in.
They say if everybody knew how the banking system worked, there'd be a revolution tomorrow.
Yeah.
And they don't teach it in schools. But also,
Yeah.
what is the role of governments? The role of governments is to make sure that asset prices continue to increase so the rich stay rich forever, or else the entire system would collapse because there's increasing amount of money that's chasing fewer and fewer goods. So productivity never keeps pace with the amount of money that's being lent out. So then moving forward to an Islamic system, what most people want to do, sort of the biggest purchase in anyone's life for the most part is to buy a house. That's where people will spend most of their money, a significant portion of their income, and that'll be the biggest purchase of their entire life. So in a Western society where we might not have, we can't go to the banking system, what are options that we have, and what are the Islamic mortgage structures that exist that a person can exercise?
Yeah, that's a very interesting question. So in today's market, especially living here in Canada, we have Islamic banks or Islamic finance organizations, I wouldn't call them banks, that offer halal mortgages that the ulama have certified as Sharia compliant. Right. So everybody, that's the code of today, like the word of the day, you can say, Sharia compliant. Everybody, whether they're investing in stocks or Islamic bonds or investing in houses, mortgages, opening businesses, they must get the certificate of approval, Sharia compliant. What is Sharia compliant? Like I mentioned at the beginning of the show, that in Islam, loan is a charitable endeavor. You cannot profit off of lending somebody money, right? So if I were to give you $1,000, in no way can I demand any type of excess in that money. You cannot give me back $1,001. That's not allowed, right? So how do we participate in an economy? Like how do I open a business? How do I go buy a house? Then you have something called a profit sharing model, or you have a partnership model. Okay.
This is what the Murabaha,
Musharaka, and Mudaraba. Mudaraba is not used for mortgages typically, but Musharaka and Murabaha are used. And within Musharaka, you have things like Ijara, which is a type of rent that you pay. Right? So to put it simply, what's the difference? I'll tell you the difference. So when you, in a conventional sense, when you go to a bank and you have a $500,000 house that you want to buy, let's say you don't have all the money, like most people don't. I have $100,000 and I need $400,000 from the bank. When I go to the bank, I tell them I want to buy a house, 500 price, 500K. I need $400,000. The bank will look at my candidacy. They will look at my income. They will look at the likelihood I will pay them back. Right? They don't care about the house. You can buy a house in the shanty town, or you can buy a mansion. They need to look at you, economically, whether you are a viable candidate in order to pay them back with interest. So they're going to look at that. They're going to apply an interest rate that is going on, in the market rate. Right? Let's say 5%. So $400,000 of finance from the bank. You pay them back amortized over 25 years. And let's say at 5%, you're going to pay them back about $700,000 after 25 years. So your $400,000 loan balloons to $700,000 by the time 25 years, and by the time you completely own the house. That's where it works conventionally. The risk with this is the bank takes no ownership in the house. They don't care about the house. They just want the house as a collateral. So in the event that you do not pay the bank, then they can take over your property and make sure that they get paid all the money they are due. Right? That's what they care about. In Islam, this is not allowed because this is a money for money transaction, right? So I'm going to give you $400,000 now, and you're going to pay me $700,000 over the next 25 years, which is not allowed in Islam.
The problem seems to be that this basically guarantees the bank will always make money. The bank always wins. Islamically, Allah subhanahu wa ta'ala says that He distributes and redistributes wealth and makes some to lose and some to gain, and others to gain and some to lose. So in this system, you're basically rigging the system. Some will call it business, but what's the difference between business and lending?
So the commodification of money is not allowed in Islam. One of the purposes of money is that it must be a medium of exchange. The moment you commodify money or you make money the motive of your trade, then it refunnels money from productive assets in society into unproductive assets. It doesn't incentivize you to become an entrepreneur and to put your head down and to work hard and to acquire wealth through selling a good or creating a net benefit to society. As a banker, you're only making money off of other people's money, right? You're not really providing a net benefit to society per se. So what Islam does is de-incentivizes you from making easy money, right? And rather pushes you towards a partnership model that all of us can profit together with the risk that all of us have according to the percentage that we invest in the business or in the house. So in an Islamic mortgage, what would happen is if you're the bank and I'm the customer, I come to you and I say 500K house, I have 100,000 down, I need you to buy the house for me or invest in the house for me. The banks will say, yes, we become partners in this. I'm going to pay 80%, so $400,000, you're going to pay $100,000. Now, the bank will go and buy the house, right? So the title deed can be on my name or on your name, whatever the agreement is. And then the $400,000, what will happen in this, conventionally what happens in this is you will become a partner with me in the house. And over 25 years or 30 years or 15 years, however long we agree, I'm going to pay you back. But how do you make a profit? What you do is you sell your ownership in the house to me on a monthly basis or a semi-annual basis or annual basis. So let's say you have $400,000 on an annual basis. You'll say, I'm going to sell you $25,000 worth of my equity, okay? Because you own the house. You can sell it to me for $40,000, for $35,000, whatever price we agree to, and I'm going to pay you that payable over every month. Like $35,000 divided by 12, approximately $3,000 a month. That's what so you make your 10K profit from that. Now, people might ask the question, well, why isn't it the same as a mortgage? I'm still paying more. Well, no, there's a fundamental difference. You own the house with me. So that if the price of the house were ever to go down, then you take the loss as well. Not like as a conventional sense, the bank gets to walk away scot-free. As long as it makes its money, it doesn't care about you as a customer or whether you make your money. So if the house value appreciates in that time, then actually you would also appreciate your stake, your ownership in the house would also appreciate. If you had 400,000, the house value is now 800,000. You would get 80% of the net appreciation as well. That's a benefit to you, right? So in other words, so the bottom line is I would buy your ownership stake in the house on a yearly basis, right? And over 25 years, I would have paid you off, and you would make a profit.
This model this is called musharaka or
this
muraba?
Is musharaka, a type of partnership.
Quickly, can you go over what is musharaka and then what is murabaha, ijara?
Okay.
And
so musharaka means a partnership. That's what it means, Islamically.
Described.
Yeah, what I just described. So we both become partners in the house, and then I buy out your partnership. It's a diminishing partnership, you can say. Okay, musharaka mutanaqisa. That's what it's called. Right. And then we have something called a murabaha. It's a cost plus profit model. In that sense, what would happen is, same example, $500,000 house. I have 100K. You would buy the house for 400K by adding the 400K. You would buy the house and you would sell it back to me, the house, for $800,000, whatever it is, whatever rate we agree to, and that's payable over 25 years, right? The one fundamental difference about this is in diminishing musharaka, it's a progressive ownership, right? Over here, I become owner immediately, but now I'm indebted to you, right? And that's why some ulama are a little bit hesitant to make this the main economic mode of financing in society, because it promotes a creditory relationship, a debtor and creditor relationship, which is not ideal in an Islamic economy. But these are some of the, you can say, inventions of the ulama based on the Quran and Sunnah that they came up with in order to facilitate house ownership, especially in Western world. In fact, it's used in most of the Muslim world as well. There is great room for improvement in this, but nonetheless, it's still a halal option because you actually own the house and the same risk you share. If the house value were to go down tomorrow, some economic crash happened, you would be liable for the loss proportionate to the investment that you had in the house.
And then what is ijara? Is that part of?
Ijara is typically is part of musharaka. What happens in a musharaka is when you give the money and we buy the house, typically what happens is in a musharaka model, they look at, so you own 80%, I own 20%. So they look at the going rate, rental rate in the market for that house. So at $500,000, let's say on average you pay $2,000 a month. That's the rate that goes, the rental market. So since I own 20%, and you own 80%, you will sort of going rate is $2,000. I will have to pay you $1,600 a month in rent instead of paying $2,000 because I owe. So essentially, I'm paying rent against your ownership in the house. That's your profit as well. This is ijara model. So it's the combination of musharaka and ijara. So instead of selling me equity, you're gonna say, okay, you're just gonna pay me back what I owe, what you owe me. And at the same time, I'm going to make a rental income from you because I own more of the house and you're living in the house. You get to benefit from the house. I don't live in the house, right? So you charge me $1,600. And let's say after 1 year, I've paid off $25,000 worth of your loan or whatever, or your ownership in the house, then my rental will decrease accordingly. And then towards the end of the loan, the term that we agree to, then I would have owned the house and effectively the rent will be net zero. And then the ownership of the house will be passed on to me. That's ijara. Musharaka with ijara together.
Okay, so what's stopping our communities in the West from adopting these models on scale or at scale?
The number one reason is education. People don't know, they cannot differentiate between interest and a non-interest model. They cannot differentiate between a conventional financing and Islamic financing. So it's fundamentally important. This is a plea to all the scholars, imams, people that have some level of background in Islamic finance. We need to educate the masses. A lot of people, when I talk to them about interest, or when I talk to them about the wisdoms behind interest, they're shocked at how vastly different they are in the Islamic finance is to conventional finance, right? So education is a key component. Another problem that Muslims face, this is a unique problem, especially in the Western world, where Muslims are in a significant minority, is the lack of funding. For Islamic banks, in a true Sharia sense, they need to get funding that is also halal as well. So right now, vast majority of Islamic banks in the world operate on a fractional reserve system. In my estimation and in the estimation of scholars, forget about my opinion, is completely un-Islamic.
Fractional. So is this, you're talking about the Gulf countries or Pakistan?
Gulf countries, most of the, pretty much 95% of Islamic banks across the world use fractional reserve banking. You might have a neobank, a small bank here, or an investment fund here, or small, Islamic finance organization there that uses, funds, whether it's an investment from governments, whether it's depositors, money that you and I put into that bank. They might have a different model, but most places, they use fractional reserve. But the banks, the Islamic finance organizations that we have in Canada are generally privately funded. So those are people that put deposits or investments in the bank.
The problems that they will have is they'll have limited funds.
Scarcity of funds. That's the problem. And so we have a problem now with, for example, a company like Munzil has 500 people or 1,000 people on the waiting list. And in fact, it was several thousand before. But, there's a lot of people waiting for houses and there's just not enough funds to go around. And with the housing market booming and houses at a minimum of $800 to $1 million, the opportunity for first-time home buyers is essentially non-existent in this market. So we have the vast majority of people purchasing homes are people that are, that had already acquired property before. And so they're refinancing or repurchasing different homes for investment purposes.
So what are the avenues for a young Muslim family living in Canada or the US in terms of home ownership? How should they get about? Where should they go?
That's the $1 million question, right? So Muslims, first of all, we should support our local Islamic financial institutions. Instead of looking at things from a very critical eye and saying, oh, it's the same in the end, it's more expensive, why should I go support them? I don't see any benefit for this long term. The reality is, in order for us to make some change in our economy and our system, we need to support these small endeavors by Islamic financial institutions and pay that extra dollar in order to derive a benefit long term. When Muslims first came to Canada, let's say in the 50s or 60s, you wouldn't have halal meat, right? So those people could have used the fatwa that, hey, you can have, the meat of Ahlul Kitab, for example, and why do we need to go and open Islamic or halal slaughterhouses in order to supply halal meat for Muslims, right? So that type of argument, that type of logic really falls on its head. When you look at it long-term view, we need Muslim businesses. We need Muslims to own houses. An acquisition of wealth, preservation of wealth is fundamental to a thriving society. And as Muslims, on average, we have significantly less wealth than our counterparts from other religions, right? So it's very important that people are able to climb that house ladder and or because it's the biggest for most people, it's the biggest investment they'll ever have. Most people don't have a Roth IRA, or people don't have a TFSA, or all these investment accounts that we have in the Western world. People are looking to pay down their houses, own a house, so that they can, lead a dignified life for their retirement. And so when they make their retirement pension or whatever it is, they can at least be able to survive without having to pay a mortgage or a forever rent for the rest of their lives.
So that leads me to my next topic of discussion, which is halal investing and investments. Obviously, there's the stock market. People have been investing in various assets, buying stocks and shares in various companies, or buying ETFs, or getting bonds. There's also people investing in crypto. So how does Islamic investing or halal investing play into that, and what are some of the options that are available?
So there are two criteria when we look into investing. One is we need to look and monitor the compliancy of the company in terms of whether it's an industry we can invest in at all, right? So the first thing is we're screening the company. Can we invest in technology? Yes, by and large. Can we invest in companies that do construction? Yes, we can. We can invest in supply chains, whatever it is. All these companies that produce a value. Apple, for example, if they're bringing a phone, right? Implementing a phone, or putting a phone out in society. We can invest in those companies, but we cannot invest in companies that are financial institutions like banks, because all the profit they make is from lending money. That wouldn't be halal. We're not allowed to invest in things in the adult industry, entertainment. Right. Obviously, for ethical reasons, for Islamic reasons, we would not be able to invest in those companies. We would not be able to invest in gambling because of religious reasons, or alcoholic companies, beverages, those type of companies. We can't invest in them because those would not even pass the first criteria of whether they are halal investments in the beginning, due to our faith reasons. The second thing we need to look at is certain ratios about the viability of the company. Is the company heavily indebted? Is the source of income that is derived from the company, is it from haram, a means of haram, or is it a halal income? Are they just selling you mubah goods like, a can of juice or water bottle or a phone or whatever we have? Are they just selling you that, or is there some alternative income they generate that is potentially problematic? We need to look at that. We need to look at the debt to market capitalization. Is the company heavily indebted? Right. So typically, ulama have come up with certain ratios. Put it simply, you cannot have a debt to market capitalization of over 30%. Okay, so the company cannot have a high level of leveraging or debt, and it must have certain fixed assets in its company, so that the money that the investment that you have is also going towards those fixed assets, and not in something that is inherently money, right? Like a financial institution. Another ratio that we need to look at is the derived income, the profit-making machine, the engine of the company. Is it the money they're acquiring? Is it all halal, right? So ulama have given a ratio based on certain Sharia principle that 5% of the money, up to 5% of the money, can be from non-permissible means, and 95% of the income derived must be halal. That's the ratios they've given. And companies that fit this criteria are a vast majority of companies, or a large number of companies, from, for example, like Microsoft, Google, and all these different technology companies. They mostly fit that criteria.
So people will be investing in pension funds via their workplaces or through the government, and then there's RRSPs, RESPs. Is there any options available for in putting money away for retirement or for education for your children? How could that work?
Yeah, so conventionally, investing with a bank, or going and buying an ETF, or S&P 500, these wouldn't fulfill the criteria of Sharia compliance. And so Muslims need to be aware of that and not just invest blindly with a financial advisor at your local bank. Like I mentioned, we need to screen the stocks. And there's organizations like Sharia Portfolio, which is an organization based in the United States, I believe. There's Zoya Finance, Financial, where you can go on their website and you can screen stocks, right? to see the Sharia compliance of it. They do all the work for you. So essentially, if the screening passes that, then you can go invest in that privately. Or you can go with organizations like Islamic Finance Guru. They have a venture capital organ or a branch in the organization where you can invest with them in different regions across the world. So those are some of the permissible investment. But typically speaking, investing conventionally wouldn't be allowed. Sometimes companies have matching incentives. So you work for a large corporation. They said, hey, if you invest in the stocks of a company, RRSP, as a retirement, they're going to match dollar for dollar up to 5% of your total salary. If the company itself is halal, you're working for an organization that fulfills the criteria of Sharia compliance, then you can invest in that and you can take benefit in that. But if it doesn't, then there's a difference of opinion, but most ulama would say not to avoid that. But if you can take your investment in the matching part and then divest yourself from any other profit that you may accrue over the period of time.
How about investing in precious metals directly into gold, silver, platinum, maybe luxury goods or other kinds of things that hold value or go up in value? Is there any sense to that?
Yeah, absolutely. You can invest in gold and silver. These are all precious metals. These are all Sharia compliant. Yeah.
Okay, so with the economy the way it is and the financial market the way it is there how does the future look like? Will there be a time where we have an economy that's Sharia compliant or Islamic based economy or a microeconomy in place in the Western world or in certain Islamic countries out there where they adopt more of an Islamic financial system or economic system almost completely, where a large number of people are participating in that? Is there any possibility of that happening, or that cannot really be compatible with the rest of the global financial system?
In order for Islamic finance and the Islamic economy to truly market itself and become the fabric of the global economic system, it's going to take a lot of effort and a lot of willing participants. Frankly, we haven't reached that level yet. We have pioneers in this industry. Malaysia is a great example that has largely, promoted the Islamic economy and took up real interest in Islamic finance and largely divested from conventional financing, so to speak. We have countries like the UAE that has done a lot, Pakistan to a certain extent. These countries have done a lot in terms of opening avenues. They have a lot of them have banks with a halal financing window. So these are conventional banks, for example, like HSBC or whatever. They have an Islamic financing window. But obviously, these solutions are more like Band-Aid solutions. In order for it to be a practical implementation of an Islamic economy, it's going to take a lot of years, a lot more dedication and willing participants. Fundamentally, Islamic finance today is also a Band-Aid solution to the problem of interest, because our entire economic system, is based upon lending and creditory relationship. Islamic finance essentially is trying to provide a Band-Aid solution so that Muslims and people of ethical values can participate in the economy without taking a large hit for the long term. So we have fatwa that allows certain things that Islamically we should not. For example, something called a tawarruq, which a lot of banks operate under. Essentially, what happens in this situation is, in order to get financing, you buy precious metals from an exchange, okay, and then for a spot price, and then the bank will sell it to another exchange for a higher price, and they give you that money. So you get the financing that you need, and you have to pay back the bank the profit margin they get, and then they sell it secondhand to another exchange, the precious metal. This, in my opinion, although some ulama have given fatwa, and many ulama have, like Mufti Taqi Uthmani, have rightfully criticized this becoming mainstream in an Islamic finance organization, some have given it some level of permissibility for now until Muslims are able to reallocate and accumulate enough wealth for them to make a real difference in an Islamic society. But there's a lot of criticism, and rightfully so, that goes in these type of avenues, because essentially it's a stopgap measure that prevents you from directly dealing in riba, but in actuality doesn't solve the problem, the fundamental problem of inflationary lending and predatory lending that we have in our society. So those are areas that Muslims need to pay special attention to, and scholars need to deliberate upon in order to provide viable solutions going forward.
So how ready is the Islamic banking industry given the permeation of cryptocurrency markets, Bitcoin, Ethereum, other cryptocurrencies, crypto coins, and the potential coming of CBDCs, which are central bank digital currencies? How will Islamic finance play with that? Is any of those halal? And how would Islamic finance structure itself using cryptocurrencies?
Yeah, so like anything else, there's a lot of debate, internal discussions that are happening in the scholarly circles about the permissibility of crypto assets or cryptocurrencies, Bitcoin, Ethereum, and all the other ones that we have, Dogecoin and stuff. A lot of the ulama mentioned that to look into the white paper and see what problem is it solving, or what is the essence of that coin, of that digital coin. And so we have scholars that have given verdicts or fatwa ruling in favor of Bitcoin. We have scholars that have said it's not permissible for reasons. For example, it doesn't have enough confidence. There's not, it's not a store of value yet, which is one of the criteria of a currency. And also, some ulama have the opinion that it should be regulated by the government. So the government should mint the coin, in other words, in order for it to be enough supply in society. Although that's not a majority held view, but nonetheless, there are some ulama who cater to that opinion. Most ulama, like Mufti Taqi Osmani and some of the senior scholars, have reserved judgment on this. They want to see how it plays out over the next few years and to see whether it's going to be widely accepted, whether governments are going to allow it to be circulated in the economy. Are you able to actually buy goods and services with that currency, with digital currencies? And if that's permissible, then they may acquiesce to that, to the permissibility or to the idea of cryptocurrencies. But personally, I don't invest in cryptocurrency because I find if it's a currency, it doesn't, in my opinion, fulfill the criteria of currency, because people are not investing in Bitcoin in order to purchase goods and services or to use it as a medium of exchange. People are investing in it to commodify it. Everybody that I spoke to so far invested in cryptocurrencies because they wanted to go from 40,000 or 30,000 that it is right now dollars per Bitcoin. They want to cash out when it hits 100K or 200K or whatever it is, right? So you want to commodify a currency in order to make a profit in dollars. Then don't come to me with the argument and say, oh, it's an asset. It's a currency. Like, at the end of the day, that's what you're looking at. If you're telling me it's a currency, it's halal to use, then it's a currency. It's not an asset, right? And if it's an asset, what value does it hold? Right? Is it that ledger? Is it the blockchain system that's the asset? Are you investing for the blockchain, or are you investing for the monetary value it holds in US dollars or in Canadian dollars? That's where the argument kind of comes. And that's kind of where my thought process is.
It seems to me that as the US dollar declines further and further, somehow it'll cause, and it inflates, that inflation itself will naturally create all sorts of assets to increase in price, including Bitcoin.
Exactly.
So it'll be a mass adoption. So shouldn't we be fighting against central bank digital currencies where governments will have ever more control to tax every little piece of money that moves, as well as create social credit systems and other systems where all transactions are now digitized, controlled, and monitored, whereas a cash-based economy that still exists today, but decreasingly so, there is a medium of exchange where no one has any insight into it and it can be hidden.
Yeah, so interestingly, the people that talk about the advantages of Bitcoin talk about its decentralized nature. Nobody has access to the keys of the blockchain, or nobody can inflate Bitcoin, in other words. But I think, in my opinion, that's very short-sighted. The idea that the government will never intervene in a decentralized currency system, and everybody everybody is going to have confidence in that, it's going to be widely accepted as a payment of measure, a unit of account, a store of value, and just be permeated in society, and all the banks are going to agree to that before some sort of a civil war or revolution, is far-sighted, in my opinion. This is not going to happen. Most large companies, entities, banking industry, government officials make money off the bank, off that creditor and debtor relationship. They make money off the ribawi system. And this idea that, this decentralized system is going to take over the world is very far-fetched, and quite frankly, it's just not rooted in reality. That's point number one. Point number two, and with regards to CBDCs, central bank digital currencies, there is a great risk. There's a lot of discussion happening in the religious circles, but also in the secular circle as to the ramifications of massive or mass adoption of that currency. How much control would it give to the government? People need to wake up to the reality. The government is not out there to look for you, to look out for you rather. The government is there to legislate laws and to uphold the laws of the land and society. And they need to exert a level of control upon the masses. And one of the ways to do that is through taxation and economic policies. That's what the government does. So CBDCs are just a stepping stone in terms of moving away from paper-based economy into a digitized economy, where now the government can literally track every single transaction that you make. Right now, if you go to a store and buy something on your credit card or your debit card, the bank already has that information. And at a moment's notice, the government can require a bank to give them that, to give them all of your transaction history in order for them to pursue a case or whatever it is, right? But whereas if you buy something with cash, there's no real paper trail left for that. And there's a level of secrecy that people desire. Every person has certain sovereign rights. We live in a democracy where you have inalienable rights and the right to purchase things so that the government or any other entity should not be able to see and track what you do, where you spend, your spending habits. They can create profiles of people, frankly, where you invest money, what you like to purchase, how often you like to purchase. And this part of this becomes a very consumer-driven agenda. And then there are data analytics companies that process all that data, make a profile out of you and jumble it together and then to go and sell it to other advertisers and they make money off your back. You become a product as opposed to being a dignified individual who has the autonomy and the sovereignty to make purchase decisions in an economy. There's a fundamental, and that's one of the preservations of our human dignity, which is a maqasid or one of the purposes of the Sharia as well. So lots of discussions happening over there. There's lots of things that people need to think about very deeply and really introspect about the role of governments in our society, the role of money, frankly, in our society, how important it is, and what are some of the opportunities that it can open up for people that otherwise it might not.
Now, people will say that all these ideas are futuristic, advanced, cutting edge, and it progresses society, and society is moving ahead. But Islamic purists will glamorize the days of olden times where gold and silver were used for trade. But how realistic is that, where a person needs to be carrying kilos of gold in order to make trade, and a future economy that goes back to precious metals will then require everyone to be carrying around heavy precious metals all the time, or a barter and trade type of economic system, which is a very old system. So how would an Islamic financial system advance, and make it still be easy?
So yeah, interesting question. So the proponents of gold don't only say that we must trade in gold. Obviously, there's a group of people who say that we must transact in gold and silver. That can be a medium of exchange. You can make mint smaller coins, lightweight coins that can facilitate trade in an economy. But a lot of other people say is at least the first step can be that we can tie our current fiat currency to the gold standard. So the supply of gold will determine the supply of fiat currencies in our society, right? So there is a hedging, in other words, that is done, right? So you can still use a paper-based dollar in order to transact for its portability, for its divisibility, for its ease of access. But at the same time, you don't run the risk of a totally digital economy that you don't have total control over. At the end of the day, for you to run an economy that's based on technology, the technological institutions in that system must be controlled and regulated as well, right? Because if you have everybody has access to a computer, in other words, they can all create money. Everybody can create digital money per se. But how to regulate that and who has access to that? And that's where the whole discussion comes in about the role of central banks, the role of government in the minting of coins and the printing of money. That's where some of the challenges lie. And Muslims, although we need to be progress-focused and technologically sound and think about the future, we also need to make sure that whatever new innovations that we have in our economy, in our banking system, or whatever it is, it needs to be in line with the principles of Sharia. What Sharia comes is, it doesn't come to inhibit or to prevent you from progressing. Rather, it lays down certain fundamental rules and laws based on which you can innovate and technologically advance yourself in your society in order to bring a net benefit to society. At the end of the day, the Sharia is there to protect you rather than to prevent you.
All right, then moving on to our kind of final topic, credit cards. So everybody has credit cards. Credit cards are naturally, when you're signing for a credit card, you're agreeing to pay interest on unpaid balances that go beyond 1 month. How Islamic is that? Are we supposed to be using credit cards? Should we be using credit cards, or should we abandon credit cards?
Yeah, so for credit cards, most scholars, especially those that live in the Western world, they have given permissibility of using credit cards so long as you are, without a shadow of a doubt, committed to paying the outstanding balance before the interest rates or before the due date. So as credit card conventionally work is that you have a payment due date at the end of the month, your billing cycle, and then you have 3 weeks, 21 days approximately to pay your balance. And if you don't pay within that 21 days, then the interest rate, which is exorbitant, no matter what religion you're going to. So, in modern Christianity, we have the belief that there's interest and then there's usury. And usury is where you take advantage of people. Some people give the percentage of 10% or more, or 20% or more, and other people say interest like 3% or 5% that we have for mortgages in the central banks. That doesn't count towards usury. Thus, it's not impermissible, rather it's permissible. These are all relatively modern innovations which has no basis in the actual religion itself. That's for starters. But nonetheless, credit cards, as we know, is approximately 20 to 25% interest rate after the 3 weeks of a grace period that you have to pay off your outstanding balance. So most scholars say that if you are committed and you are definitely sure that you can make that payment, complete payment, before its due date, then you are allowed to engage in credit cards. Other scholars, and they have a very valid point, is that it's impermissible because the very foundation of the agreement you have with the bank is that it stipulates that you will pay interest to the bank in the event that you do not make the outstanding payment by its due date. So that transaction, that agreement itself is nullified and impermissible in Islam. And in my opinion, and this may be a little bit of a conservative view, there is credibility to that argument. Because at the end of the day, whether you pay off the balance at the end of the month or you don't, you're still supporting an economic system that is inherently ribawi and completely antithetical to what Islam teaches. And moreover, you are also supporting an industry that is the intermediary between you and somebody that sells a commodity, and they making a profit off of that for no reason. So whether let's say you're paying off all your outstanding bills every month, but every time you go and you swipe that credit card, the Visa company is making 2.5% or 1.5%, right? Sometimes up to even 4%. Some organizations do. Why? For merely facilitating a transaction, right? So these are all things that, if you think deeply enough, you may come to the conclusion that a lot of things are impermissible. But at the very least, I think a good a middle ground for people to follow, especially living in Canada, is that you should limit the use of credit cards, ideally up to one. People also give the argument that if I don't have a credit history, then I can't go buy a house, I can't purchase a car. And that's a whole nother discussion about, financing cars. Is it halal or not? Perhaps we can talk about that today or another time, but that's another topic of discussion. So how do I build credit history? So, okay, fine. If you want to build credit history, you have one credit card and make sure you're paying it off every month. That's where the scholarly consensus comes from. Just on a side note, there's also now debit Visa cards. So people can still purchase stuff on their debit Visa cards. And from my understanding, for a payment that you make every month, you can build your credit with that debit Visa card as well.
All right. Thank you so much for your time. And that was very interesting. Thanks for sharing all your thoughts. We'll be getting a lot more episodes regarding this topic, and hopefully many more guests We might bring on some guests from some of the Islamic banks that exist in Canada and that are operating, and talk about some of the solutions that they offer, and talk about some of the other avenues that we have as Muslims to access capital, purchase our home, do our businesses and investments. That's it for now. Assalamu alaikum wa rahmatullahi wa barakatuh.